Hello and welcome to the Reorg, where we dive into the Satoshi Nakamoto Institute archives and re-examine old ideas after years of accumulated proof of work. This is your host, Michael Goldstein, also known as Bitstein, and joining me as always is my co-host, Pierre Rochard. Welcome, Pierre.
Hey, thanks for having me back, Michael. Looking forward to this one.
Yeah, so we're continuing our way through the SNI mempool crash course, and we just finished basically the series of articles talking about hoarding and the sort of value of hoarding bitcoins and why that's where Bitcoin gets its sort of fundamental value and some of the reasons why people would want to do that and how to think about how to make even more of your hoarding in a sort of business environment with entrepreneurship when you have to deal with the fact that Bitcoin can have such tremendous gains. And from here, we're moving on into, I think, one of the most infamous parts of the sort of SNI mempool canon. And this article we're going to be reading in particular came out before the Nakamoto Institute existed, but we republished it. But here we're getting into the topic of altcoins, and we've been strong critics of altcoins, as you can see, going back all the way to 2013. And we're going to be reading the article that sort of started that, The Problem with Altcoins by Daniel Krawisz. Just as a summary, we say, as it grows, the network effects of its competitors shrink. So as Bitcoin grows, the network effects of its competitors shrink. And ultimately, there can only be one currency. And, we'll talk a little bit more about what we mean by that. But yeah, this article kind of kicked off some of the altcoin skepticism of the day. So this is The Problem with Altcoins from August 22nd, 2013. The price was about $110 at the time. And before we get started, though, I wanted to share a historical snapshot. So I'm going to have to describe it for the people who are just listening. But for those viewing, you can see on the screen the historical snapshot of coin market cap on this day in 2013, and you can see the top coins. And Bitcoin is obviously at the top, followed by Litecoin, which has about a third of the market cap of Bitcoin, and then XRP, which has existed for a very long time. And, we could talk about what allows them to continue to exist, because it doesn't seem to be fundamentals. But that was sort of a close third behind Litecoin. And then we had things like Namecoin, Peercoin, Feathercoin, Novacoin, Primecoin, Terracoin, Infinite Coin, and so on and so forth. And all of these, it just kind of dwindles in market cap as you go down, as you can imagine. The important thing to note here is just all of these coins are effectively irrelevant. I would say even Litecoin today, I actually don't know what can go to the current chart to see. Litecoin is no longer in the top 10. I see it at 21. So the number 2 is now 21. It's managed to hold on, almost maybe a Lindy effect. This article was written before Ethereum even existed, and we still see XRP at number 4. Number 3 is effectively dollars, Tether. But the point being that, especially back then, there was immense churn in altcoins, and I think that needs to be taken into account with these particular critiques of altcoins that we're about to get into. So we'll go ahead. Actually, did you have anything to say on those historical charts before we hop into the actual article?
No, the market has spoken, and I would also invite you to describe that's the beginning of this article. I find it to be very...
Okay, yes, agreed. So the main image for the article is a collection of Elvis impersonators, all trying their best to be the most Elvis. the most Elvis-y Elvis they can possibly be, but none of them succeed. None of them are the true king, and that is left to Bitcoin. So let's go ahead and jump in. Why no altcoin can succeed? New ideas attract not only visionaries and pioneers, but also charlatans and fools. The former group understands the nature and potential of the new idea and attempts to extend it in new ways. The latter observes the success of the former and expects similar results through blind imitation and empty hope, rather like the Melanesian cargo cults, which arose after World War II when the American military abandoned its airports there. And we have a picture of a airplane made of basically all kinds of just parts that people found, all kinds of just pieces of wood and such, but it's the shape of an airplane. And the hopes of these people is if you can capture the broad shape of the airplane with resources, you'd be able to recreate the effects of an airplane. And the caption notes them as the Litecoiners of aeronautics. This analogy is absolutely appropriate to characterize the many alternative cryptocurrencies modeled on Bitcoin, which are collectively referred to as altcoins. Technologically, they are all very similar to Bitcoin. There is a blockchain to store transactions, a consensus mechanism to build the blockchain, and a cryptographic protocol to register transactions. Some prominent examples are PPCoin, PrimeCoin, Litecoin, and FryCoin. Note that the most of the prominent examples are not things that held up. Some altcoins incorporate interesting new ideas, but there is an essential feature of Bitcoin which they all lack. It is not a matter of its technology, but rather of history and community. Quite simply, a medium of exchange that is more widely accepted on the market is more useful than one which is not. This is known as the network effect. An initial imbalance between two nearly equal media of exchange will benefit whichever is more widely accepted until a single one overwhelms the rest. There is no limit to this effect. Ultimately, one would always expect a single currency to overcome all its competitors. Because it was started, did you have something?
Well, I was going to add, I used to agree entirely on this. It's not a matter of its technology. But since seeing a lot of altcoins over the past decade, I do think that Bitcoin has a uniquely sound set of properties from a technological perspective that are essentially impossible to improve on. And we've discussed it on past episodes as well. But I just wanted to say that now, 10 years later, I don't fully subscribe to this. I think that there's a Schelling point consensus on the software engineering, on architecture of the system that makes it the most reliable money in the world.
Yes, I agree. I'm going to finish this section, and then I have a few thoughts on that as well, because I think you're right. Because it was started earlier and has had a greater opportunity to grow and attract users, Bitcoin has a market larger by a wide margin than all the markets of all the altcoins put together, and this makes it vastly more useful as a currency. To defeat Bitcoin, an altcoin would require not just superior technology, but such vastly superior technology as to be an advance over Bitcoin comparable to the advance Bitcoin represents over fiat currency. Furthermore, a truly great innovation would much better serve people by being incorporated into future versions of Bitcoin rather than by requiring them to switch to something else. Indeed, the people who have proposed new ideas that are actually good, such as ZeroCoin and Mini Blockchain, did not develop their own currencies around them, but have simply described their usefulness as features. The Bitcoin community is not just overwhelmingly larger, but of overwhelmingly better quality as well. Bitcoin is surrounded by real entrepreneurs working hard to create new and useful services for Bitcoin. Altcoins are surrounded by loudmouth pretenders and with irrational hopes of duplicating Nakamoto's success. This does not mean that there is anything intrinsically wrong with altcoins. The problem is simply that once Bitcoin exists, then there is no additional value from a monetary standpoint of creating knockoffs. Can anyone really expect to create something of value by re-releasing Bitcoin under a new name and with a few tiny changes to its source code? What makes Bitcoin great cannot easily be duplicated. Thus, While the Bitcoin community matures and grows as more and more entrepreneurs are attracted to its potential, the altcoin communities can only whine for attention. And I think to get to your point of, Bitcoin having specific technological advantages, I think that's an argument that it didn't really make as much sense back then. And the reason was back in 2013, the way altcoins worked in their sort of initial motivation. Now you had things like Namecoin where there was like, okay, we're going to be like doing this sort of DNS thing, and that was one of the original altcoins. But primarily, everything from Litecoin to everything else was basically Bitcoin with one feature changed. So you'd go on Bitcoin Talk Forum, there'd be an announcement thread. And it's like, we're announcing, X coin, some given coin. And it's like, instead of 21 million coins, we're going to have 42 million coins. Or instead of 10-minute block times, we're going to have 8-minute block times. Or, we're going to use this hash, or we're going to do this thing. It was always just like kind of one little change. And for the most part, a lot of these changes, we could argue all the ways in which actually Bitcoin sort of threads the needle just right on these in very particular ways. Like the 10-minute block time actually has a big effect, and we're going to talk more about block times later, but 10 minutes actually kind of gets through the different trade-offs very well in a way that some of these other ideas did not think as well. So that would fit under a true sort of technological advantage, just better engineering. But at the same time, a lot of the stuff it wasn't even creative. It was just literally a sort of take an arbitrary concept in Bitcoin and change it to your own slightly other arbitrary thing, and you're trying to sell it as this, totally different, awesome currency that can be better than Bitcoin. And I think later on, we started to see people, and this was, part of the marketing as well, trying to create altcoins that actually offered some unique technological premise that people could operate off. And that, I would disagree with the technologies that they're choosing as the basis for a global money, but it was at least trying to be technologically unique. And that would further bolster your point of actually the technological decisions of Bitcoin, while they sometimes might feel too constraining, are actually very wise and prudent decisions when it comes to the long-term goals of Bitcoin.
Yeah, I agree. And, to that last paragraph, once Bitcoin exists, there's just not a lot of it in the knockoffs. And today, I think that what people point is really the invention of digital scarcity. And that is once there's no reason to literally reinvent the wheel. So I don't know that was top of mind for us or for Daniel, but it doesn't seem to get mentioned here. And I think that now that's kind of the thing that people point to.
Agreed. I would also like to point out, so he mentions, people had proposed ideas, and I think there's always been an open-mindedness in Bitcoin of hearing out ideas of upgrades and putting them out for debate and such, and we can, it'd be a good different discussion about the actual governance that we think about to get these ideas in. But some of these included this zero coin and a thing called mini blockchain, which I don't know as much about. But the irony is both of these ended up creating their own altcoins. So Zero Coin became what is today known as Zcash, and Mini Blockchain just became some, completely irrelevant cryptocurrency. But the point is eventually people do decide that they want to just create something else instead of accepting Bitcoin as this monetary king.
Yeah, and we've even seen this on, let's call them cryptocurrencies, where, for example, they launch something that's really successful on Ethereum, and then people bully them into launching their own token. And they'll say, oh, you shouldn't tie yourself to Ethereum. You should just do your own thing because it's been proven so successful as a use case on Ethereum that you should be capturing more of that value by launching your own token on your own blockchain. So there's kind of a schismatic to these kinds of utility tokens, if we want to call them that, is the opposite of what people, including in this article, hypothesize would happen, which is that, oh, if there's useful on another chain, then it gets into Bitcoin. It seems the opposite happens. And on top of that, if we look at what upgrades have gone into Bitcoin, I don't think that they've really originated from outside of Bitcoin. They seem to have originated from within the Bitcoin research and developer ecosystem. And I think the reason why that is that they are used to thinking about the constraints of Bitcoin and what can be done within those constraints. If you just look outside of those constraints and you have an idea, then it never really fits into Bitcoin. And so it never can really get traction into actually being an upgrade to Bitcoin.
I believe there was one concept that came from a coin called Sia coin, but I don't remember what concept it is. But I believe that's like the one example of something that came from an extrinsic source that has really made its way into Bitcoin in a serious way. And then the closest is, and this comes up in the article later, this concept that I'm going to say, which is also having, altcoins as a experimental chain for some concept. That was something that Litecoin tried to market itself with early on with Lightning, because it was more easily able to just add in features, whereas Bitcoin has, more governance constraints. And so, people could play around with Lightning on Litecoin. Although then for people like me, I literally had no interest in that. It's like, I don't care if something's on Litecoin or not. I want to see it when it's on Bitcoin. And so I personally did not play with Lightning until it was available on Bitcoin itself. So the idea was intrinsic to Bitcoin, and it did not matter to me as a Bitcoiner until I could actually use it with Bitcoin. So maybe some other developers, some like actual developers, could say that maybe they got use out of using it on Litecoin, but I certainly didn't care.
Yeah, and it was on testnet, and now we have Signet, and we have, it's called a Bitcoin Inquisition of activating soft forks in these test networks, so that you have to create another currency just for testing purposes, which is kind of, I think the problem with that is that the investors in that alternative currency that's just for testing purposes, they can be getting sold a bill of goods from the marketing people.
Yes. All right, so moving on, a section called Motivated Reasoning. And the image here is a bunch of old-time stock analysts looking at the stock tickers. This is, I think actually a picture from not too long before the market crash in 1929. But, the altcoiners have always been obsessed with their exchange rates. Bitcoiners as well, but I think altcoiners have a special kind of degeneracy. But so reading here, what is a cryptocurrency actually for? I say that its purpose is to become money. It is obvious that creating altcoins impedes that purpose. Altcoins can only be explained if we believe the purpose of cryptocurrencies is to make money rather than to become money. If you can trick people into investing in your new altcoin, then you can make a profit trading it or mining it and selling it. And all the arguments of the altcoin promoters serve as misdirection from that basic purpose. They have developed a series of fallacies capable of fooling newcomers into joining them, but they are all disingenuous. Thus, the altcoin communities are not just embarrassing, but dangerous. Desperately wishing to be taken seriously despite having nothing worthwhile to offer, they will say absolutely anything to convince other people to join them. They persist in saying things easily refuted by economic logic, common sense, or verifiable facts. They become belligerent when challenged. This is all they can do because they have nothing of value to offer. They are great at conning people because they have succeeded in conning themselves, and it is impossible to tell where self-deception ends and outright lies begin. This is bad for Bitcoin and bad for the people who are fooled. The claims of the altcoin promoters deserve refutation not because they are intelligent, but because they are repeated ad nauseum. Ultimately, their content is secondary, and the real problem is the foregone conclusion to which they are all directed. If the arguments I discuss here are eventually discredited completely, the altcoin promoters will just grope for new ones rather than admit to being wrong. Thus, it is quite possible that in the future, what I say here will no longer correspond to what they are saying. Because of what I have said above, however, it is safe to assume, whatever they are all wrong. And on this, I think a key economic point to make, and he's saying to make money rather than become money, and reinventing the wheel and adding yet another currency. Every additional currency is a reversion to a state of barter, because you have to flip flop between different currencies to pay different people. It'll always be less efficient than having a single currency that you can do economic calculation on, and knowing that others are doing economic calculation on, so that resources are actually moving effectively and efficiently based on how people truly value them. And I think this lack of understanding, of not understanding that it is a reversion to a state of barter, that is to say, it is a rejection of the concept of money. It's allowed so many different schemes to develop because there's effectively a belief. Sometimes it's just people literally think something will beat Bitcoin, but most of the time there's a belief in a multi-coin world. And so you have altcoins. In a future episode, we're going to discuss the concept of app coins. And these have had just so many descendants operating in the same space of just needing to create new currencies for new sort of use cases and such, but always fighting against the reality of what problem money is trying to solve in the first place.
So I think that there's a demographic out there, some percentage of the population, that it's ingrained in them, that they like this stuff. So, for example, they'll be carefully watching airline miles or credit card points and looking for deals, and it is a state of barter for them that they enjoy almost as a pastime, like going to the slot machine. And the whole communities built up around barter-like activities, alternative currencies. So I think at the same time we agree that it's unproductive use of time, and also just making the anthropological observation that there's communities around this. Yeah, and I've met a lot of people over the past 10 years who have told me that they used to be a degenerate altcoiner, but they've seen the light and now they're just staying humble and stacking sats. And so now, with the benefit of hindsight, I think that we could actually describe altcoins in some ways as an entry point at the top of the funnel towards a path of enlightenment.
Yeah, especially if the entry point is number go up. Some of these altcoins admittedly have number go up way higher than Bitcoin. And the argument is not that altcoins cannot possibly have number go up, but that their number go up is not sustainable, or they're not necessarily, it's not actually going towards the development of a full global currency. It's more of a animal spirits,
as we call
it. Yes. So continuing on, but doesn't Bitcoin deserve some healthy competition? First of all, Bitcoin already has competition. It competes with the dollar, with PayPal, and with the banking system as a whole. It has plenty of competition. Second, there is no reason that a competition is necessarily good for its own sake. If people compete to be the most productive, then that is good because the result is more production. If people compete to control the government, then this is bad because the result is that the government will be controlled by the most ruthless and unscrupulous people. And here he's referencing content from Hayek's Road to Serfdom, talking about how the worst get to the top. There is a reason that there can be two competing businesses, even if they follow identical production models. There is a limit to the size an organization can achieve without being more efficient than two parallel organizations. However, in an economy capable of supporting only one business for a given product or service, then really there should only be one of that kind of business. In the case of a currency, it is inherently most useful when it dominates its competition. The less competition a currency has, the more useful it is. If you try to compete with the best currency with another one that's exactly the same, that makes yours the worst currency, so you really should not have bothered. Third, a currency is simply a standard that people agree to use as a medium of exchange. For the most part, it is awkward to have competing standards. Do we really need competition between the mile and the kilometer, for example? Suppose automobiles had just been invented in two groups because of vested financial interests, got into arguments about whether it was better to drive on the left or the right side of the road. The greatest benefit to ordinary people would not come from prolonging such competition, but from its resolution. Finally, there is competition within the Bitcoin community. And this is the sort of competition that actually benefits people. There are exchanges, payment processors, online stores, and so on. Every time someone starts a new Bitcoin business, he benefits the Bitcoin economy. Every time someone starts an altcoin, he makes it worse. A related point is the argument that altcoins can be used as experiments to learn about how different ideas might work in practice. This use is completely legitimate and necessary. However, an altcoin that was understood to be an experiment would not be treated as an investment or an independent product. If this is how altcoins are treated, this would be fine. My objection is to the lies and scams. An experiment is worthless if the people running it are constantly lying about it. So that idea actually held currency, no pun intended, back then. That was sort of an idea that people did throw around a lot more. But like you said, we have a lot more tools for people to spin up better ways to test out different ideas than actually creating a thing that has sort of a natural incentive for a lot of people to start kind of putting money in and making their bets. But I do think this point about money as a standard is important. This idea that the greatest benefit to ordinary people comes not from prolonging competition but from its resolution. Ultimately, that's what the market is looking for: is what is the good that can be most marketable. And there's sort of that feedback loop of identifying what's more marketable, making it more marketable, and sort of seeing what plays out from that feedback loop. And that's a feedback loop that's going to have a natural single winner. And I think it's important to also understand that standards don't have to be literally perfect. What really needs to happen is that it needs to work and at scale. And I think that sort of at scale argument is one that matters a lot, that I think some people have overlooked.
Yeah, it turns out that ironically, the way that competition plays out in Bitcoin is people trying to acquire Bitcoin. And so I think that I've heard some cynicism that some of these coin projects are just a way for the creators to try to acquire more Bitcoin, and that they sell their new cryptocurrency to some naive investor, and then they themselves, they don't hold it. They only sell it. They only acquire Bitcoin because they understand that Bitcoin's going to be the winner, but they don't have any other way to build their stack other than issuing other cryptocurrencies that are perhaps misleading to investors. So I think that's an interesting observation. And that it also speaks to Peter Thiel's book, 0 to 1, right, where he talks about how competition is, yeah, okay, it's part of the free market, but from a business perspective, it's pretty destructive. And then the counter argument would be, well, shouldn't there be a way for everyone to benefit from the monopoly? And if a company, let's say a company is privately held, they have all the stock and they're a monopoly, so all of the benefits accrue to their shareholders, and there's no way to even become a shareholder. Bitcoin's the opposite, where anyone can become a shareholder, right? Anyone can acquire BTC and benefit from the growth of this monopoly, which I think is a really interesting property of the system.
I think when we talk about things like monopoly as well, we have to go back to the sort of Austrian theory of monopoly, and specifically Rothbard's addition to this idea, and the way that he describes monopoly. Because when we look at sort of standard economics, we hear things like perfect competition. And this is set up as the ideal situation. There's just, endless businesses all doing the same thing. And so they're all competing, and all costs are going down to the marginal value of production and all that. And the problem with this is that can't exist in the real world. That's not a real concept. And so it falls for what we call the nirvana fallacy, where you make up a thing in your head and then compare the real world to that and then say everything about the real world sucks because it does not match the wonderful fantasies that I have. And Rothbard, instead, he doesn't really care about how many producers there are so much as the sort of legal structures around that production. So if you are a single producer because you are the best at it, or you live in a small town and you're the only barber, that doesn't mean that it's bad for the economy. It wouldn't necessarily be good for that economy for like a small town to have 1,000 barbers, but like simply being the only one is not indicative of something bad for the market. Indeed, assuming that you are not violating various sort of libertarian legal principles about free market and property and all of that. To have a monopoly does not mean that you're getting legal privileges from the government, which would obviously be an artificial monopoly. But if you're just at the top of your game, and so no one can step up and match and rival what you are capable of giving people, that's actually good for the economy, and that's why you're doing so well, is because you have been that good at creating value for people. And so when we talk about monopoly and competition, and especially something like Bitcoin, where it's a standard, it is a network good, there are natural power laws to these things, we would expect that a dominant one exists, and it's literally just that much better at delivering value, in this case of being money, of being a medium of exchange. And just because, and at this point, I don't know how you could say, Bitcoin has so much competition. I mean, how many, there's like what, millions of altcoins and meme coins and these and that coins. All of these things exist. And Bitcoin still remains the sort of absolute king. And so there is a lot of competition, and this is how the market works. Competition in money is not one where you end up with the 1 to n situation. It's something where you really do end up with just kind of it's quite the opposite in this case. It's like n to 1. So Bitcoin creates the 0 to 1, and you have this proliferation of 1 to n, but all of this still like finds its way back to the single 1.
And as we record, recently, gold has been outperforming Bitcoin in the very short term. So even, outside of the currency competition of cryptocurrencies, if we look at the currency competition with gold or even with the US dollar, every time that Bitcoin has had a bear market, you could say, well, the dollar is outcompeting Bitcoin within this time frame. So there's a huge amount of competition in that direction of bigger assets than Bitcoin. The Bitcoin is the up-and-comer trying to demonetize.
Yes, and what makes Bitcoin special and why we wouldn't say the same thing about Bitcoin in relation to gold is that I'm trying to think of where he says this exactly, but the Bitcoin is actually something unique. It's not merely just a copy of gold. People get frustrated at the idea of digital gold because Bitcoin is so much more than mere gold, and it's so much more than a fiat currency like the dollar. So despite them being much bigger than Bitcoin, Bitcoin offers something unique that actually makes it a real contender in relation to the others. Whereas all of the altcoins, they don't offer anything that makes it a real contender to Bitcoin, let alone to these much larger currency networks. So continuing on, multiple blockchains would reduce load on the network. In the Bitcoin network as it works today, all nodes receive all transactions. If Bitcoin grew to be a very large network, that could be a lot of transactions that all need to be communicated to everyone. Altcoin promoters seem to imagine a world in which their own favorite altcoin has a status very roughly equal to that of Bitcoin, where each currency will be used for different kinds of things. This is impossible because the network effect always favors imbalance. However, even in the very unstable situation of two roughly equal blockchains, it is not necessarily true that there will be reduced network traffic as a result. If people had to work with both networks, they would still have to receive every transaction from both networks. And if people had to exchange their funds often enough from one currency to another to fulfill different purposes, this could easily result in a greater number of total transactions. In any case, while Bitcoin may experience growing pains over the next few years, there is no reason to expect it to outpace Moore's Law in the long run. Network load is a problem that technology can overcome without requiring us to rely on an inferior system of money. So, I think this is a good point. I don't actually quite remember the specifics of how people were talking about this. I think it was primarily Litecoin as the silver to Bitcoin's gold. So you use Lightning for small payments and Bitcoin for big payments and stuff like that. But the point here with like just the growth of a network, any blockchain is going to have to be, watching everything and validating everything. And that is inherently an n squared problem. Whereas when you're like, oh, you have your second currency, you're only dividing by two. And so when we're talking about like big O, you're not actually making it more efficient. It's just, yes, you have half the stuff, but that can't compete with the n squared growth of validation that has to occur. And so it doesn't really hold up from a reduced load. You could say that there's like some technological inability to, handle certain kinds of economic trade. But as he's pointing, technology can also develop, and we've seen so many ways. We've discussed a few ways so far on this show of how Bitcoin has adapted to the needs of the network, whether it's transaction batching or whether it's creating things like the Lightning Network and related technologies and so on and so forth. People find a way to work with the constraints of Bitcoin to allow it to do that. And moving to these other currencies itself has constraints of what is actually possible to move in and out of. So it's not really clear how it's better than just using off-chain Bitcoin.
Yeah, I agree.
So the next one, altcoins are good for money laundering. This is possibly true today, but there is no guarantee that it will be true in the future. The idea is you sell Bitcoins for some altcoins and then buy Bitcoins again. There will then be no connection between the Bitcoins you had before and those you have now. However, because altcoins are inherently unstable, there is no reason to expect them to remain useful for that purpose. In order for a currency to retain value, there must be enough people who want to hold it, not just people who want to quickly trade in and out of it. An altcoin would have to be good for something other than money laundering, something good enough that at least some people would want to hold on to it for more than they wanted to hold on to Bitcoins, if it is to be good for money laundering. Thus, if you really want to launder money, support Zero Coin as an upgrade to Bitcoin. Barring that, you would probably be better off trading through a commodity more likely to retain value, such as gold and silver. Now, he's using, kind of provocative language here. He's broadly just talking about privacy on chain. I think that's the more palatable way of talking about this. But privacy has been a concern with Bitcoin for a long time, obviously, because the entire chain is public and every node is validating every single thing, every single block and transaction. And so that raises a lot of concerns about privacy. We've talked about how the privacy model of Bitcoin is actually sort of more interesting than people think, and that the real issue has to do with the KYC exchanges, which, by the way, happens to be where a lot of these altcoin trades are actually happening. There's simply like not a lot of liquidity, and thus also not a lot of an anonymity set when you are trading these things, say like in person, like just hoping you can, find a guy in a back alley to, trade some Monero or something. There's not a lot of places where you can get money in and out of, at high liquidity. So from a privacy perspective, how do you even achieve that privacy when there's, if there's only two guys using a particular private chain, well, then the chances of figuring out who is who in a transaction is not very difficult compared to one that has a large network. And on top of that, a lot of these privacy coins, things like Monero, they purposely hard fork, like every 6 months. So that itself comes into conflict with a lot of, at least our beliefs about the importance of backwards compatibility in Bitcoin or in a currency in general. And even then, there's concerns about the security itself. With Bitcoin, even where privacy does not feel as strong as some people would hope for, that at least has the benefit of being basically, we'll call it perfectly secure. I know that's a bit of a overstatement in the world of anything cryptography, but it's just, it is secure. The whole thing is based around strong security. Whereas we've seen Monero be broken before. We see things like Zcash. They had a setup that was a little dubious, and the entire setup for it needs to have everyone, like it's a very trusted setup. And it's like, if you don't get it right, someone could, break the whole system. So there's a bit of a dubious nature to just the entire chain because it's poisoned from the genesis. And it's just not clear that, as much as people can critique Bitcoin's privacy in various ways, I don't think that altcoins have provided a better solution that retains that which is needed both from an economic and a security perspective to feel secure and to be able to trade something else as a more private medium of exchange. And so, for better or worse, Bitcoin just remains the very best. Also, I think dollars are underappreciated as the real currency for the people who do want to do provocative money laundering. The professionals go with dollars.
Well, what I've heard too is, there's some big names out there like Hunter Biden. They do artwork,
Oh yeah, art is a big one. So much easier than spinning up a coin too. You can just splatter some paint on a piece of canvas, and people will go wild.
Yeah, and then of course Senator Bob Menendez, he used gold bars and fancy cars.
Yes. So I think if you're interested in those types of transactions, those have a much more lindy and successful track record, but also that has not helped them either. So it's, broadly speaking, I would hope that people just try to be good people in general. But obviously, privacy is very important. But we should not. We should be careful in where we place our hopes for privacy to be upheld. Did you have something on that?
No. I was just going to agree. Ditto.
Yeah. I mean, the world is a brutal place, and information likes to be free. So, shouldn't we let the market decide? This is by far the most ridiculous argument I hear on this topic. The wisdom of the crowd is superior to any person, so people should not presume to tell the market what to think, right? I find this view utterly idiotic. It is wrong to dictate the market choices to it by coercion, but to simply express an opinion is to engage in the market process itself. To be consistent, the people who make this argument would have to say that Consumer Reports is as tyrannical as Joseph Stalin. To take this to its logical conclusion, suppose everyone just sat back to let the market decide. Then the market would never decide anything because the market's decision is just the sum of the decisions of all the individuals that make it up. None of them could make an argument that one product was better than another. There could not even be any consumer reporting to protect people from scams and shoddy products. The free market just wouldn't work. When a libertarian steps back to let the market decide something on which he has some legitimate insight, then he is preventing the market from working as well as he otherwise might. It is a fact that the market makes stupid choices all the time, and there is nothing wrong with me saying so. This is because the quote market is just a collection of people all making decisions that are as foolish as the kinds of decisions that we know people actually make all the time. This in no way means that I do not understand the systematic superiority of market processes over state centralization. If I want the market to win out over the state, it is ridiculous not to engage in a debate over the correct decisions to make such a victory likely. And I agree, this is one of the most just irritating arguments that we hear on this topic. I can't say that I hear it as much anymore, but this was always basically the position. Well, you don't know what the market is going to decide, so we should be open-minded to altcoins because you have a gazillion of these things. Maybe one of them will win. How do you know the market will choose Bitcoin, et cetera, et cetera? And it's like, well, we can actually look at the fundamentals. We can use our brains. We can make an entrepreneurial judgment. This is what all of the market is. Every entrepreneurial action of a human is a speculative action based on an understanding of the world around you. That means that you actually have some model of the world where you think some choice A will work better for you in the end than some choice not A. And that is the basis of all decision making. It's like literally human action. You cannot exist without actually acting in this process. And so when we say, oh, let the market decide, it's like, well, you are the market. You are part of that market. And you also have the ability to use your rational brain that God has given you to actually look out in the world and think about what is stupid, what is not stupid, what can actually better you, what might not. And this doesn't mean that you're always right, but you don't have to pretend that you're completely in the dark and at the whims of other people's choices. This wouldn't even really be a market at all. And but this shows up in a lot of different kind of libertarian ideas. Is like everyone just has to be happy with whatever the market is providing because thank God the market is providing something. But the market is a process, and so if you don't like that, you don't have to like what the market has to offer. And in fact, you not liking it is exactly what opens up the opportunity for doing things differently and one that is more geared towards your view of what is good in the world.
Yeah, and it's also interesting to see that some investors like Paul Tudor Jones came out bullish on Bitcoin. And in his thesis, he wrote, hey, look, after the proliferation of altcoins in 2017, and I think he wrote this in like 2019, he said, it's clear that Bitcoin has emerged as the winner in the market. And so, even if you're like, okay, well, I'm going to sit on the sidelines and let all of these other people figure it out, and I'm going to see the market decides. Intelligent people now can say, okay, well, the market has decided.
Yes. And then at that point, it's like, well, if you want to take out, since the market has decided and so decisively, the idea of competing with it is that much more difficult. And so you have to take that into account when someone is trying to come up with a new idea of how you would beat Bitcoin or any other currency. The more that the market process has solidified around us, I shouldn't say solidified, but coalesced around a standard, the harder it is going to be to shake from it. So you better have something true to offer. Moving on, script coins. There is a class of very similar cryptocurrencies that rely on an algorithm called script as the hash function. I shall refer to them as script coins. They also have faster block generation times and a different coin mining schedule. In fact, none of them even have white papers. Perhaps they are so unoriginal that there is nothing to write about. Despite this, or perhaps because of it, the script coins are surrounded by the loudest, least intelligent, and most obnoxious communities. And the arguments supporting them are either fallacious or detached from reality. When Bitcoin first came out, it was possible for anyone to mine coins with a CPU. Once software was developed that mined using GPUs, then CPU mining quickly became obsolete. GPU mining remained profitable for some time thereafter because the price of Bitcoin continued to increase as more people became miners. This could not persist indefinitely, and eventually there began work into the development of FPGA and ASIC mining. Once these technologies were developed, GPU mining would become obsolete as well. And then there's a picture of a sort of hacker garage mining setup with fans trying to cool, a bunch of miners that are messily hooked up to one another. And it says, the golden age of mining, according to altcoiners. However, some miners who had heavily invested in GPUs did not wish to see this happen and didn't want their investments in GPUs to go sour. Obviously, this was a vain hope. It cannot be expected that it should be possible to run an ordinary computer at profit for very long. Profits draw more investors, which leads to lower profits as the available opportunities are used up. Script was designed to be a memory hog and is consequently unsuited to mining with a machine consisting almost entirely of ASIC chips, like those used for Bitcoin. And it was assumed that script mining would therefore always remain in the hands of the GPU owners. This, by the way, is false. If it ever became profitable enough, an ASIC machine could be produced with a shared memory, and it would make GPUs obsolete for script mining too. The script coin phenomenon can thus be likened to the Candlemaker's Petition, a brilliant satire by Frederick Bastiat. It presents a fictional argument purporting to be from candle makers that all windows should be kept closed by law during the day to prevent unfair competition from the sun. All arguments for script coins should be seen in this light. They are masks for the hope that someone's GPU mining rig should not turn out to be a foolish investment. The first script coin was Litecoin, but soon other nearly identical script coins were developed by people who not only wanted to use GPUs, but who also wanted the additional benefit of being the first movers in a new currency. Feathercoin, Terracoin, CHN Coin, and Yacoin are the others which I can name off the top of my head, but there are new ones every day, which is a reductio ad absurdum of the whole concept of altcoins. And this is the funny thing to note about this is that the original purpose of Litecoin was to be GPU resistant. So it was quite funny that by the time we were talking about this, they were talking about Litecoin being ASIC resistant because this was making Daniel's exact point. It's like, well, when it becomes profitable enough, people will find a way to solve the problem. And people did. And if I'm not mistaken, I think that there are ASICs now. I could be wrong. Not even have been worth it.
Yeah. It's crazy that there are, but I think it's just now you've got people saying like, oh, we're going to have proof of storage. So instead of compute, you're going to have to buy a bunch of hard drives. Right. And so they're just churning on these ideas. Yeah. And, it's interesting that Daniel wrote this in 2013. And then I have a chart here in front of me of the marginal revenue per megawatt hour of Bitcoin mining rigs. And fast forward 5 years after Daniel wrote this, during the December 2017 bull market, the revenue went up to $2,000 per megawatt if you had a S9. And then it collapsed down to below $200 a megawatt. And then in the most recent the prior bull market, I guess, 2021, it went up to $400 a megawatt for the S19 if you had upgraded your hardware. And then it, of course, went back down to $100 a megawatt. And now in this bull market, if you had the latest generation S21, it really peaked at like $250 a megawatt. So it just shows that the trend he's pointing out is continuing to happen with tremendous, let's call it decay. And so it really is now a very professionalized industry on one hand. On the other hand, you can actually get a little bidax and be lottery mining in your home office. So
which has been wildly successful for certain individuals.
Yeah, for people who win the lottery is great. um, but obviously, on an expected value basis, you're losing money. I would push back on this idea that the system is easier to regulate and corrupt if there's a few large companies, because that assumes that they have a legal monopoly in the sense that they can keep out any new competition. And that's just not the case. And so I think that, Bitcoin mining will always be permissionless. And that's what makes it decentralized. It's not the equality of outcome, it's the equality of opportunity that makes it decentralized.
Yeah, I would argue also from a sort of Austrian perspective, there's no, I mean, I sort of reject the whole concept of a natural monopoly. And so even if we see that there are certain bottlenecks with chip production and we see things with energy, first of all, there are questions about, in what ways is that caused by government intervention. But even regardless of that, if there's no true monopoly in things like energy production, you don't know who the next person is that's going to come up with an energy solution somewhere, and you don't know where it's going to be. There are certain kinds of potential, energy productions where it doesn't have to happen in a particular location where there is a particular resource. Things like nuclear, you can just put one up. I'm not a nuclear expert, but you can just put one up, and you have obviously you need the uranium or plutonium or whatever thorium, like whatever material for the nuclear reactor, but it can happen in many different places. You don't know ahead of time what will suddenly become profitable and what new ideas will emerge from the market as that profitability goes up. And so, yeah, it's not without that legal monopoly. There's a much more dynamic process, and one that can even be very surprising. Continuing on, a shorter confirmation time is a better safeguard against double spend attacks. This is true in an extremely misleading way. The issue here is the risk of a double spend attack. If you receive notice of a payment from someone, then there is the possibility that he has made a second conflicting payment using the same bitcoins. In this case, there is the chance that the other payment will be accepted into the blockchain rather than yours, and yours will be considered invalid. This is a theoretical means of scamming Bitcoin merchants. Since script coins have shorter block generation times, one will see more quickly in a script coin network which of two conflicting transactions will end up in the blockchain, unless there is a malicious attempt to manipulate the blockchain. See below. Furthermore, a double spend attack is only possible if the two conflicting transactions occur within a few seconds of one another. So the best defense against double spending is simply to watch the network for a few seconds after receiving a payment. If no conflicting payments appear, then there is nothing to fear from double spending. This feature is a planned upgrade for Bitcoin 0.9, so it will not be long before any slight benefit to shorter confirmation times will be eliminated. Moreover, no recorded case of any successful double spend attack in the history of Bitcoin, although it has been rarely achieved under special or controlled conditions as an experiment. Therefore, it is not a real risk under present circumstances and is not a valid argument to use script coins. And, I think reorgs are an important thing here. This is, the sort of malicious attempts to manipulate Bitcoin can cause a reorg. But really, like shorter block times, but with lower hash rate, just means you need more confirmations before suitable finality. And you have to consider the trade-offs of those block times. So a shorter block time makes it harder to propagate blocks in time for people to, mine the next ones, which can cause more reorgs, which would cause people to need to wait even more confirmations before they feel comfortable with the finality of their Bitcoin payment. Now, Daniel's talking about basically zero conf payments, which, it depends on what kind of a merchant you are as to whether or not you think that's suitable. I imagine anyone kind of selling coffee or something, zero conf is enough. If you are selling a house for Bitcoin, you're going to probably want to wait more confirmations, from any confirmations. But, yeah, having a shorter confirmation time does not actually help this, especially when it comes to that sort of long-term finality.
Yeah, agree.
So script coins are more secure against a 51% attack. No, they aren't. Performing a 51% attack means to control enough computational power to generate blocks faster than the rest of the network put together. The attacker can then generate a blockchain fork from some earlier period and eventually grow it until it is longer than the main one, and other nodes in the network will begin to recognize the new branch as the legitimate one. Deriving the likelihood of a successful 51% attack is a difficult problem that requires the theory of random walks. However, ultimately, the derivation is not necessary because the attack only succeeds if the other miners go along with it. There is nothing preventing the rest of the network from ignoring the attacker and declaring his branch invalid. If the attacker's branch is clearly malicious, then this should not be a difficult decision. The other miners would also stand to lose a significant amount of cash if they should submit. In fact, the Bitcoin community has already successfully responded to an incident like this in March of 2013, in which a software bug caused a fork in the blockchain, and it was necessary to come to a consensus over which branch could be considered the correct one. Moreover, the Bitcoin network is enormous and growing exponentially. Performing a 51% attack against it would require a vastly greater cost than for any other altcoin network. So the question is academic because Bitcoin in reality offers much greater security. The cost of a 51% attack against Bitcoin is unknown because to perform it would require a continual and exponential investment in order to keep up with the rest of the network. There is one way that a script coin does come out ahead, however. Consider an attacker who owned 49% of the network rather than 51%. This attacker's branch would be expected to grow more slowly than the main branch, but there is still a real probability of producing a longer branch in a given amount of time just by chance. If two attackers each have 49% control over the Bitcoin network and a script coin network, and can both afford to continue their attack for the same amount of time, then the attacker against the network with shorter block generation time has a much lower probability of success. This, however, is not a reason that any sane person would consider script coins to be superior. Now, on this one in particular, 49%, we found out, later on, or at least it became more recognized later on, that something like 33% of the mining is sufficient to cause plenty of problems coming from selfish mining. And in fact, the person who at least brought that to the academic world decided to tell everyone that they should start selling their Bitcoins. And later on, he started becoming an altcoin scammer himself and pumping his own altcoins. So that's interesting. But the point here gets back to that sort of reorg situation where, or sorry, the trade-offs of the block times is like, yes, if you had to continually producing more and more blocks, because the block confirmation is shorter, then perhaps a script coin would be better at fighting that off. But at the same time, there would be a lot more difficulty handling consensus in especially very adversarial conditions when you're making so many blocks all the time. It would be hard to ensure that the blocks are propagated in general, even without a having control of the mining network, just having the issue of the network itself being able to get the information to the miners of what all of the other miners are doing. So yeah, I agree that these script coins were not really helpful against a 51% attack. The one thing I will point out is there's this openness to, if the attacker's branch is clearly malicious, then this should not be a difficult decision of just declaring their branch invalid. That would require a hard fork, which at this time was not as fully appreciated as as sort of a negative in Bitcoin, and something that we tend to only think in terms of the most existential situations in Bitcoin, and even then, there's sort of some nuance I would add as to what would make a hard fork good in such a situation. So I think along with the sort of zero coin upgrade comments and this does show that this is an article from 2013 where this concept had not been as developed. But also, the author of this article, continued to hold on to, hard forks being and not valuing that backwards compatibility quite as much as I think we do. And so that's somewhere where I do sort of disagree. Although I would note that people like Luke Dashier have also, over the years, controversially stood up for the idea of doing things like changing the proof of work algorithm to deal with mining concentration and stuff like that.
Yeah, it all just seems very hand wavy to me until we actually see something happen.
That's a good point too. And even with this incident in 2013, I would need to go revisit that one where there was the bug introduced. I believe Mike Hearn had changed the database. There's the Berkeley DB database, and it caused a problem. And people were able to kind of roll back and effectively reorg the bad branch because people realized, like, hey, why don't we not use buggy software? So it was technically a kind of, I think it may have even been somewhat of a hard fork, but it the actual situation was not one in which I don't think that chain would have succeeded anyway.
Well, my understanding is that they rolled back to the prior known good version. And so I think that from a shelling point perspective, that makes a lot of sense.
Right. But they rolled back, but only one of them didn't have a bug, and
the node software, right?
Yes.
That has the consensus rule,
I see what you mean. Yes, like going back to the previous version. So it's like, well, so I forget which version number this was. Let's call it 7, just for the sake of it. They're saying, okay, let's go back to 0.6, and so when you do that, it effectively reorgs onto that chain now, and so it's fine. And so it was kind of like the hard fork that wasn't. I know that BitMEX, and I can add a link in the show notes. BitMEX research has done some stuff on forks in Bitcoin, and they have information on this particular incident. So I will be sure to include that for people who are interested. Moving on, this now takes a look at some of these coins that don't exist anymore. But PP coin, so I would note that early altcoiners were not as good at marketing. That was something that altcoiners learned over time was better marketing, better web design, and so on and so forth. PP coin was probably one of the worst named altcoins that I can remember because, Fart coin, a more recent one, that was purposefully going with such a name. Coin was just not thinking it through. But I have already discussed PP coin and the proof of stake from a theoretical standpoint. Proof of stake encourages people to hold coins, which is necessary for a currency to gain an initial value. However, that is most important for a currency's early stages. Because people lose their proof of stake as they create blocks, proof of stake discourages a specialized class of miners with the incentive to keep the network running at as high capacity as possible. One thing that can be said for PP coin, however, is that altcoins are a product of the proof of work system. Proof of stake would not have led to them. If Bitcoin had transitioned to a proof of stake system before it was valuable enough for ASIC mining to develop, perhaps there would be no altcoins. And this is actually something that I disagree with him on, going back to our earlier comments about the sort of psychology of people that find themselves into altcoins. I think, and even to this day, like we're seeing the ways that different things are competing with Ethereum, and now it's moved to proof of stake, and things like Solana are not using proof of work. It's it's a highly centralized thing. People are just interested in printing money, and so I think historically it was historically contingent. That because proof of work was one of the main defining features, that was the thing that people were copying and kind of playing with in different ways with altcoins. But as I've said for many years, if people can print money, they will print money. And had Bitcoin not been proof of work, first of all, it just wouldn't have existed, because I disagree. I don't think that it would have succeeded with proof of stake. And so not only like Bitcoin wouldn't exist, but also people would have just found another way to copy whatever was succeeding, if there was anything that was succeeding.
Yeah, and if they even need to copy anything, because one of the critiques now, so you had the Ethereum people, they said, oh, we've got better technology than Bitcoin, okay. And then the Solana people come around and they're like, oh, we have better technology than Ethereum. And now we can stop doing that, right? We can stop creating new systems, new tokens. And then the meme coin people come along and they say, actually, we don't really care about the technology at all. We just want to create money. And you guys created a platform where we can just create lots of money. And, that's then the narrative from the Ethereum and the Solana people. They're like, oh, this is just nihilism. What have we done? This is Frankenstein's monster. What a disaster. People are just creating their own money. And the Bitcoiners
They learned from the best.
Yeah, we're all over here just laughing at the nihilism.
Yes. Well, it kind of reminds me of, you see this happen in, I guess, a lot of, schismatic, communities of various kinds. It's like you're supposed to like reject this, but only stop there. And we saw similarly after the block size war, and Bitcoin Cash continued on its journey. They started to come across these same arguments that we had for running nodes, trying to argue against the people who wanted bigger blocks than the ones that Bcash was ready to offer at the time. And so, yes, we want bigger blocks, but don't make them that big. It's like, yes, we want to create new money, but hey, don't create that many new monies.
I would just add in terms of the motivation, it's that each new money is illiquid, and that means that they can pump it and dump it better than any previous money that has strictly greater liquidity.
Yes. And yeah, I meant to say this when we were talking about the capital intensiveness, but this is also, because Bitcoin has so much liquidity, and we're going to talk more about liquidity in the next article, but there's also a capital intensiveness with the ability to work with what we would call a Bitcoin, which obviously doesn't actually exist in the code per se. It's all a bunch of sats. But, one Bitcoin, 100 million sats, requires like much more capital intensiveness to acquire today than it did in the past. And that has also flustered people into thinking that there's, a lot of concentration and stuff like that. But I think it's a natural part of the market process coalescing around such scarcity. And it is a feature rather than a bug of Bitcoin, that it's able to maintain its supply despite this race to acquire it. Continuing on, Primecoin. Primecoin is a cryptocurrency whose proof of work is based on finding various sequences of prime numbers rather than on a hash algorithm. Its existence is based on the fallacy that Bitcoin mining is not useful. However, as I have shown in the proof of work concept, this is not true. Bitcoin's proof of work system is a consensus mechanism. It is essentially a means of overcoming a prisoner's dilemma scenario among Bitcoin users. This cannot be done without some demonstration of spent resources that produce no individual benefit. Primecoin disrupts this process by attempting to make its proof of work accomplish something of value. This inherently disrupts its value as a consensus mechanism. Thus, it is false to claim that Primecoin's proof of work is, quote, useful, whereas Bitcoin's is not. Primecoin's method is in fact less useful because it introduces an inherent conflict of interest not present in Bitcoin. Although, to be fair, generating prime sequences is almost useless, so I do not believe that it is likely to cause any real-life problems. Primecoin is a wuzzle. It tries to do two unrelated things at once, which, generally speaking, is the opposite of a good design. Its prime-based proof of work is nothing but another gimmick to make people forget that altcoins are a waste of time. This is not to say that distributed computations are not a great thing, but there are probably better ways of implementing one with cypherpunk technology without the pretense of also being a currency. And yeah, I think it is sort of a disservice to a goal of a project of creating, in this case, like trying to find these prime numbers that would be useful for a very particular thing in mathematics or something. Uh, to do that when you have to like tie it to a currency, it's like, well, in order to do this, we're gonna like play Federal Reserve to do it. It's just a bit silly. But yeah, the key thing, it effectively creates a political variable, which means that there's more conflict available to disrupt the consensus process. And it all goes back to people not really having a strong enough feeling for why network consensus in a decentralized way is so very important for a monetary network. And, the same mentality in Primecoin's case, to their credit, it did not make them question cryptocurrency. It just made them question Bitcoin and want to start an altcoin. But the same mentality is the one that drives people's hatred of Bitcoin from like the sort of environmental point of view and so on and so forth. Is they look at it, they see that the proof of work itself appears useless because they don't value consensus themselves. And so because it's useless, you can start, arguing anything you want about Bitcoin because you inherently don't think Bitcoin is solving anything. So I think this is indicative of a very deep problem. It's also one that, in some ways we see it among all of the other competing proof of work systems even is like, ASICs are too intensive, and we need bespoke handcrafted GPUs to be making our consensus. So do you have any thoughts on this?
No, I think that makes sense, or it doesn't make sense.
Continuing on, Frycoin. Unlike other altcoins, Frycoin appears to have been created in good faith and is not supported with disingenuous arguments. The arguments are still wrong, but nonetheless, Frycoin deserves more respect than the rest. This is not the place to refute the economic theory behind Frycoin, but essentially it is based on the idea that the interest rate is a purely monetary phenomenon rather than a result of time preference. Instead of charging a transaction fee, Frycoin imposes a fee for holding coins. Frycoins decay at a rate of 5% and transactions are free. Miners are paid out of the decayed Frycoins from out of all the non-empty wallets. Thus, by design, Frycoin discourages hoarding and encourages spending. It is touted as a currency for the working class rather than the wealthy because it supposedly can't be used for making loans. Actually, however, Frycoin loans would be given out at the same interest rate as the rest of the economy because they would be in competition with loans given out in terms of more durable goods such as Bitcoin. There would be no reason for a lender to accept a different interest rate with Frycoins because there is nothing requiring him to hold Frycoins. He could just convert from Bitcoins just before the loan is given out and back to Bitcoins as soon as it is returned. That, by the way, it kind of reminds me of the whole tax argument for why a currency holds its value is paying taxes. And it's like, well, you can just, if you need something to pay taxes, you can wait until the moment you need to pay taxes and then get your hands on the other currency to pay your taxes. But otherwise, you're going to actually hold in the currency that makes sense to hold. The 5% decay rate would have the effect of a tax on capital, like a property tax. This means that the price would be lower than otherwise by a proportion determined by the overall interest rate of the economy. Say, for example, that I wish to hold X Frycoins. This would incur a fee of X divided by 20 Frycoins a year due to Frycoin decay. The present value of all the fees would be an infinite sum that decays according to the overall interest rate of the economy. If the interest rate is I, then a present value of all the fees would be one fee multiplied by 1 minus I over I. If the interest rate were 10%, say, and I wish to hold 20 Frycoins, the value of the fees would be 9 Frycoins. Thus, in this example, I would have to pay 9 Fry coins to hold 20, and thus Fry coins would be less valuable by a factor of 20 divided by 29 than they would be if they did not decay. Now, if something is created with the express intention of providing an incentive to get rid of it, then it stands to reason they will all the more not want to buy it in the first place. Thus, Frycoin is actually made to discourage investment in itself, which is the very thing that gives a currency value in the first place. Frycoin is an idea whose time will never come. Since it rebukes buyers, it resists ever having value. Frycoin is thus not so much a scam, but more an abortion. Its ideals are so refined that they eschew the merest chance of affecting the real world. Perhaps it could be taken as some sort of absurdist parody, which would be brilliant. I hope that is true because otherwise it is just too sad. It's brutal, but also true. And I think, beyond Frycoin, which, obviously at this point is something that most Bitcoiners, like a lot of these have probably never even heard of if they were not around back then. What was I going to say? They wouldn't know about it today, but the kind of underlying thing there still remains, which is people argue all about is like how much should people be holding versus not holding and such. And we've obviously taken a pretty hardcore hoarding position in Bitcoin in terms of what people should do or whatever. But even that has been, very much a descriptive one, and we can argue about, capital development and all of that. But we see a lot of altcoins have tried to make a stand for themselves by making these comparisons. So the way that Ethereum has danced around Bitcoin, both in positive and negative ways, according to this idea. So, at first it's like, well, it's too expensive. Bitcoin's too expensive, and we need Ethereum. Ethereum would be able to provide stuff with a lower transaction fees, so people will want to hold it. So it's kind of like this cheaper thing. And then on the other hand, they got trolled by sort of the stock to flow stuff into pushing for ultrasound money. So they wanted to take this as like, okay, well, if all you need is to make things, even more, scarce, like, not have this sort of decay situation, it's like, how about you make it so that it's even more scarce, over this time frame, and more people will hold it. And so everyone's like dancing around, and Bitcoin's the only one that stands. It's like credible monetary policy that people understand. It does reward savings by nature of its scarcity, but it otherwise, like, it just stands strong with its initial parameters and doesn't have to change anything, and it just is what it is. And everyone else has to try to like fight against that. And I find that very funny.
Yeah, I mean, this also misses like why the Bitcoin miners need revenue, and they, well, that question alone, I have completely butchered the wording there. But if they're not getting the revenue from the transaction fees, then what's their incentive to include the transactions in a way that is economically aligned with the demand for the transactions? So, like, even from that perspective, this is really just an absurd altcoin.
Yes, and I'm not surprised that it's not around anymore.
I wouldn't have used the A word, though.
It's a very brutal thing. Although in some sense, it's the very idea does kill it before it can even be born. So it's like before the first block can even be mined, the idea has already killed itself. So it's a very unsavory thing, but I do understand the metaphor.
Yeah, not going to get into a debate about when life starts, but okay.
Well, okay, yeah. Does it start at a conception of the idea itself for cryptocurrency?
Well,
or the Genesis block when you have
the idea of meeting someone. But anyway, let's wrap this up.
Moving on to the conclusion, the overwhelming reason that Bitcoin is superior to its altcoin competitors is that it is overwhelmingly more popular. Some of its competitors might have worked as well or better had they been invented first, but given the history that led us here, none of them should be considered remotely competitive to Bitcoin. If an altcoin were somehow to beat the odds and end up more popular than Bitcoin, then I would have to change my allegiance. However, if that did happen, I think it would call into question the viability of cryptocurrencies in general. If they can rise and fall like fads, then it is harder to justify investing in any of them or believing that any has staying power. I take Bitcoin's past as evidence of its future prospects, but if it can be overtaken by an initially tiny competitor for no logical reason, then the previous success of any other does not necessarily mean anything. In short, the altcoin phenomenon is the product of greed and bounded rationality. They deserve nothing but scorn, and anyone who wishes cryptocurrencies to improve the world should avoid them entirely. And I think that's a great point to end on, which is there's no reason to hold a money for a long period of time if you can't be confident in its future dominance. And there's no reason to hold money in the short term if you don't believe that there's going to be reason for people to hold it in the long run. And so if you can't be confident, like at some point you're just going to find yourself, you might as well invest in Frycoin. You might as well just not have a money that can even work at all. If you want a money, it needs to be the thing that is dominant and can plausibly remain dominant, because that network effect, that liquidity, that is what makes a medium of exchange function as a medium of exchange.
That's right.
So, well, thank you for joining me. I look forward to next week talking about this topic further, but from a more strictly economic point of view. So I hope you have a good day.
Yeah, thanks, Michael. See you next week.
Thank you for listening to The Reorg. This podcast is brought to you by the Satoshi Nakamoto Institute, dedicated to advancing and preserving Bitcoin knowledge. Our mission is to deepen understanding and appreciation of Bitcoin, not just for today, but for generations to come, by creating enduring educational resources and generational knowledge for generational wealth. If you enjoyed the show, please support our work by sharing links, deepening your own Bitcoin knowledge by exploring and studying the SNI archives, and contributing sats. As a 501c3 nonprofit, we rely entirely on supporters like you. Whether you can give a few Satoshis or a few thousand Bitcoins, your contributions enable us to continue educating current and future Bitcoiners worldwide.